Essential FAQs every U.S. homeowner must know. If you own a home in the U.S. or plan to pass one to your children, this video matters. These tax rules could save your family thousands. Let's break them down clearly. 3 conditions you need to know to exempt capital gains tax when selling a house in the U.S. Many people ask, does everyone qualify for capital gains tax exemption when selling a home? The answer is no. You must meet 3 conditions. First is you must be the legal owner of the home. Your name must be on the title. Second is you must have lived in the home at least 2 out of the last 5 years before selling. And last is you must not have used this exemption within the last 2 years. Let's look at a simple example. You and your spouse bought a house for $500,000. 10 years later, it's worth $850,000. That's a $350,000 gain. If you meet the 3 conditions, the entire $350,000 may be tax-free, because married couples can exclude up to $500,000 in gains. Does this rule apply nationwide? Yes. This is a federal tax rule from the IRS, so it applies in all states. Does vesting affect this exemption? Not directly. As long as you are on title and the home is your primary residence, you may qualify. What if you rented it out for a few months? You may still qualify, as long as you meet the 2 out of 5 year residency rule. Step up in basis revealed, how to cut taxes on inherited real estate. Now let's talk about one of the biggest tax advantages in real estate inheritance, step up in basis. So what is step up in basis? When you inherit property, the cost basis is adjusted to the market value at the date of death. Here's a simple example. Parents bought a home for $200,000. When they passed away, it was worth $1 million. The new tax basis becomes $1 million. If the property is sold immediately for $1 million, there is 0 capital gains tax. If it's sold for $1,200,000, you only pay tax on the $200,000 gain above the stepped-up basis. However, step-up in basis depends on how the property is titled. If it's community property, you may receive a full step-up. If it's joint tenancy, only the deceased person's portion receives a step-up. So you should review how your parents held the title. Do you need to sell immediately after the owner's death? No. You still benefit from the new stepped-up basis. But any appreciation after the date of death will be taxable. What if the property is held in a trust? If it's a revocable trust, it usually qualifies. If it's an irrevocable trust, it depends on the structure. You should consult an estate planning attorney. What if the property is owned through an LLC? If it's a single-member LLC, a step-up may apply. If it's a multi-member LLC, only the deceased member's portion typically receives the step-up. In short, ownership structure determines how much tax benefit your family receives. Next, let's talk about Proposition 19 in California. Learn about Proposition 19 to save big on property transfers. If parents transfer their primary residence to their child, will property tax increase? It may not, if certain conditions are met. Under Proposition 19, if the parents transfer their primary residence, and the child uses it as their own primary residence, then the property tax may not be reassessed to market value. That means the child may keep the lower tax base. But if the child does not live in the home, for example, they rent it out or use it as a vacation property, the property will likely be reassessed at market value. Here's an example. Parents bought a home for $400,000 and pay $5,000 each year in property tax. 10 years later, it's worth $1.2 million. If the child moves in as their primary residence, they may continue paying around $5,000 per year. If not, property tax could jump to around $13,000 annually. Is there a value limit under Proposition 19? Yes. If appreciation exceeds $1 million above the original taxable value, the excess may be reassessed. Do you need to file paperwork to receive benefits from Proposition 19? Yes. The heir must file for the primary residence exclusion with the county assessor, typically within 1 year. And remember, this rule applies only in California. Other states have different laws. What is vesting? Steer clear of property ownership confusion. Many people confuse property ownership and vesting. They are related, but not the same. Property ownership simply means who owns the home. For example, you, your spouse, or someone else. Vesting explains how ownership is legally structured. For example, joint tenancy, tenancy in common or community property. Let's say you and your partner buy a home together. About ownership, you both own it. But vesting determines how your ownership is legally defined. Why does vesting matter? Ownership alone does not fully define inheritance rights, tax treatment, or who can sell the property. Vesting clearly outlines who inherits, who has decision-making power, and how taxes apply. You should consult escrow, an attorney, or a qualified advisor to structure vesting properly. Incorrect vesting may lead to tax loss or family disputes. Can one property combine multiple vesting types? Yes. For example, A and B may hold title as joint tenancy. C may hold it as tenancy in common. As long as it's clearly documented, it's legally valid. Vesting is not just a line on paperwork. It determines ownership rights, inheritance outcomes, tax consequences, and whether your family avoids probate and conflict. If you own property, plan inheritance, or want to transfer assets to your children, make sure you understand vesting and tax rules. Small decisions today can save your family hundreds of thousands of dollars tomorrow. If this video helped you, please like and share it with someone who owns real estate. And don't forget to subscribe for more practical strategies to protect your property and reduce taxes legally. See you in the next video.
Real estate and mortgage broker Danguard, with experience in over 1,000 loan applications and real estate transactions, aims to provide you with useful and general knowledge about this field. For advice on each specific case, please contact via email or website provided below the video. Don't forget to click like and subscribe to the channel to stay updated with the latest information from Danguard.